Hello, ladies and gentlemen. Welcome to Triple N Media News. I am NIK NIKAM from Houston, Texas. Stock market rattling even before Fed Chair Jerome Powell speaks. Let's see why the stock market is rattling. Fed Chairman Jerome Powell, he'll be addressing the Senate and the House in the next 2 days. Federal Reserve Chair is like John Wayne riding on a horse with a whip, that is to whip the stock market. Well, maybe not so. In general, the Federal Chair appearance before the Senate and the House means it's going to have a significant impact on the stock market. Let's face it, the Federal Reserve is in charge of setting the rates for the Treasury bonds. They will be not only setting the interest rates, but they will also be giving the future economic outlook. So that's another kind of a hidden variable which nobody can predict. Let's see what we can deduct from analyzing the various aspects that are taken into consideration by the Federal Reserve Chair in making any type of decisions. First of all, what are the options? Either they can keep the interest rates same, increase the interest rates by maybe 25 or 50 basis points, which I seriously doubt it will be 50 basis points, or reduce the interest rate. Those days are gone. Now we are in a different environment. Now we are in a different setup. Even if the interest rates don't really shake the market, the forward economic outlook can rattle the entire stocks and bonds. Let's see how it can do. Okay, let's look at some of the things that the Federal Reserve will be looking at. Is the stock market overheated? Of course, they're not going to tell you that, but they are paying attention to that. They are looking at inflation, which is an important aspect of economic condition across the country. And of course, the interest rates. They're also looking at various economic barometers like unemployment, productivity, factories. Okay, let's spend a couple of minutes on the stock market. If you have been in the stock market in the last year, you are probably one of the luckiest persons on earth. And I'm going to show you some examples. First of all, the stock market since end of March and beginning of April, right after the coronavirus pandemic hit the United States, the stock market took off like a rocket and is still continuing to go up, except in the last week or so, it has sort of given up some gains, maybe because they knew the Lone Ranger was coming with a whip. Some economists, some stock market pundits think, well, the stock market is primed for correction. Oh, really? How much? 10%, 20%, 40%? Well, it can vary depending upon who you talk to. Let's look further. Here is the Dow Jones Industrial, which is DIA, Diamond, which is proxy for Dow Jones Industrial, which dropped right after the coronavirus hit the United States. And somewhere at the end of March and April, where it was like $180, this is, I'm talking about diamonds, went all the way up to $320 and just hovering on like a baseline here at $315. So ladies and gentlemen, this is a huge run up of the stock market. And these pundits who think it may be poised for correction, they may be right, because if it were to correct, either the next stop would be $300 here, or it could be as low as $260 to $270. Ooh-wee. Sometimes it has to come down just as it went up. So that's just the diamonds. Let's look at the Nasdaq, the tech industry, which was much more robust compared to the Dow Jones and Industrial or the diamonds. Here it went all the way from like $170 to $335. It has given up in the last 3-4 days. But again, if this is poised for correction, is it going to stop here? Is this the baseline? Or is it going to hit 270? Boy, the numbers kind of parallel, Diamond and Nasdaq. This is called the triple Q. That's the proxy for Nasdaq index. Let's look at Spider, which is the proxy for S&P 500. And it's the same story. It started off at $230, went all the way up close to almost $390. It's given up a few days. Then again, where is the next stop? Is it like $370, or is it going to be $330? If it's $330, that's $60 drop. Then we are talking about like 18-20% correction. 18-20% correction is probably nothing major for a stock that has run up so much. What do you think? I mean, everybody is a pundit in stock market. I'm just reading the chart here. All right, let's move on. And here is Tesla. If any stock had a run up, it is Tesla. It went up from a split value of $100 to $900, and it has given up almost $200. That's close to 20% drop in Tesla stock, gentlemen, in the last 2 weeks. So looking at all these things, stock market is pretty hot. When it's hot, things can change. Let's look at the interest rates. The 2-year and the 5-year treasury bonds went up by 25 basis points. 10-year treasury bond went up by as much as 41 basis points, and the current interest rate on a 10-year treasury is 1.41%, something like that. This is what rocked the stock market in the last few days, this interest rate jumping suddenly. What's making the interest rates jump? We'll find out from Fed Chairman Jerome Powell, but definitely it already had an impact on the Nasdaq stock market, as you can see here. So interest rate is already heating up. The stock market is hot. The interest rates are heating up. Now let's look at the next parameter, that is inflation. Have you looked at your grocery bill for the month lately? Have you seen the prices at your favorite restaurants, the same food that you were getting before COVID hit town? The prices have gone up maybe 20, 30, 40%. I'm talking about regular grocery shopping at Rando's, Kroger, or HEB. I'm looking at the receipts and say, wait a minute, how is it going up? Because nothing has changed here. Most people are not even going to work. They are working from home. Then let's look at the economic indicators. Economic indicators are going to be quite different during the current administration as they were in the previous administration. I'm not going to take names here because the unemployment report already shows there's an increase in unemployment. With all these layoffs, it's going to be going up. With increased cost of labor, the producer price index is going to go up. Increased regulations means more cost. Increased taxes means less spendable money. That means corporates are going to cut back on benefits and move some of the jobs outside the country. And those job cuts are going to hurt the economy in the long run. Trying to get rid of fossil fuel. I can't even say that one. Fossil fuel. We have seen the disaster in Texas in the last week. The so-called renewable energy, the solar panels and the windmills choke the entire Texas power grid. So that means any renewable energy is supposed to have a backup system equivalent in terms of non-renewable energy. So what is the point? Anyway, that's not the major concern today. But looking at all these things, what is your prediction? The stock market is hot. The interest rates are getting hotter. The economic indicators are creeping up. They are not business friendly, not corporate friendly. And on top of that, inflation. So what do you think Fed Chair Jerome Powell is going to do? Is he going to increase the interest rates, keep the interest rates same? I know it's not going to go down. If you think, then you're in a different world. What do you think? Leave your comments below, and thank you so much for watching this. And please do subscribe to our channel so we can bring you much more interesting news on a daily basis.